What is going on, guys? So we're going to do a Roth IRA overview. Now it's really important to get started on this because if you wait even 1 year, you could have tens of thousands of dollars less just because you waited. Now if you are new to the channel, hit that like button below and don't forget to subscribe, and let's get started. But seriously, taking the next 10 minutes to learn about Roth IRA can make a huge impact on your life, especially starting the earlier you can. Now I can't guarantee that you're going to be a millionaire out of this, but using the calculations I showed near the end of the video, you'll understand what exactly you need to do for your situation. Now you can pull out this money anytime before you retire, but if you pull out earnings, you have to pay a 10% penalty and whatever it is in your tax bracket. So as we go over Roth IRA, you need to understand what it first means. So IRA is an individual retirement account, which is basically an account for any individual, and they can't pull out until they retire. And the Roth part of the IRA means that you already paid taxes. So if you ever hear Roth as in Roth IRA, that means that there's post-taxes with that, and that the taxes are already paid. Now it's really important to realize that this is tax-free when you take it out, whereas if you were to use any other account, you have to pay taxes on that. Now it's really important to get started on this because if you wait even 1 year, you could have tens of thousands of dollars less just because you waited. It's really important to start as young as you can, especially for any investing, but with Roth IRA, because you can take it out at the end tax-free, the earlier you start, the more you can have at the end. Now you might think that this is an exaggeration, but later in the video I'm going to show you exactly why I say that. This is because of compound interest where money grows on more money. So the more money you keep growing, the more money you'll have after that. And it just continuously grows and grows and grows. And the more that you have, the more that you can make quicker. Now you can start this at any age, but if you're below 18 you have to have a parent sign off for you. Now there are rules on how much you can put into a Roth IRA every year. And as of right now, it's $6,000 every year. Now, if you're over the age of 50, you can put in up to $7,000 every year. And to mention that once you're 59 and a half, you can take it out at any time and not get penalized for anything. The coolest thing to me about having a Roth IRA is that you can play around with it. Where if you were to make a bunch of capital gains, you can sell it right away. You don't have to think about taxes. Taxes in the normal market can be really annoying because you can have to pay 30, 40, 50% taxes. Whereas if you have this Roth IRA, you don't even have to worry about taxes at all. Now it's really important too to get as much money in as you can the younger you are, first off from the compounding, but second off because you're not getting taxed as high as you will, maybe once you have a real job when you're in the 20s, 30s, 40s, and you have a serious job where the tax bracket is going to be a lot higher than what you're at the younger you are. And you really can put in as much as you want. You can put in $5 every day, $20 a week, $5 a week, $100 a month. You can put in any little bit and it will help no matter what over time. So I really look into the statistics of this, and I find it really amazing when I look into the future value calculator and how if you were to put number of periods 41, so if you were to start at 18 and not take it out until you're 59, you can see how much of a return you would make. And you can be very conservative about this too, and you can still see a very good improvement. Okay, so let's say you're 18 and you have 41 years until you're 59, and you have $1,000 you start with in this Roth IRA. Now let's say that after this, every year, you save up $4,000, you save as much as you can, be very conservative, put $4,000 in every single year. Now there are very safe investments you can put this in, like ETFs or index funds, mutual funds, but what you can't do is get cryptocurrency, sorry for those, or any of those forex traders. You can't do any of that. But let's say you do want to invest, and let's just say that right now you only do the S&P 500. So I looked up the average return of the S&P 500 and it says about 10%. Now I don't want you guys to assume just because I said this that you're going to get a 10% annual return, because that's actually very high. So let's go back to the calculator and put in 10% for that interest rate, and then we hit calculate. Now that's going to give us $2 million. That means that by the time you're 59, from putting in $4,000 every year and only $1,000 the first year when you're 18, that means that you would have $2 million by the time you're 59. And you can take all that out and not be taxed at all. Where if you were to do this in a regular investment account, you would have to pay a very high percentage of that, like 15 to 20% of that you would lose. And as you just saw, that if you were to have to pay 20% of that $2 million you just made, you would be losing $400,000 to taxes. And yes, taxes can be for a good purpose, but the fact is that you don't want to have to lose $400,000 of money that you could possibly have in your pocket. Okay, so now let's say you put in $2,000 initially and $6,000 every year, but we're not going to assume you get 10% because that can be very high to some people and unrealistic, so we're going to go with a very conservative 6%. Now if you calculate that, you still get over $1 million. So as you see, the percentage return is a huge deal, especially from the compounding I discussed earlier, and the fact that you're putting in more money now and you still get $1 million less later on. Like the difference between averaging 6% a year and 10%, which is very hard, don't think it's easy, but it has a huge impact on the fact that it's compounding on that money and it continuously compounds. But in reality though, 6% is a much more realistic number to have as a return. So if you do this and save as much as you can and put that little bit into just this Roth IRA, you don't have to do anything else, you would have $1 million by the time you're 58. You can see how much you would get every year. So if you look at the interest, you would only get $120 from your investment the first year, but if you look at the 10th year, you would have $4,339. Scroll down to the end by the time you're 59, and that year alone, you would make $57,000. Now the amazing thing is that say you started at 20 and not 18, it goes down to $889,000. That's over $100,000 that you just lost because you started 2 years later. And the reason you lost that much is because you lost the last 2 years from the compounding. That's why if you were to start earlier, you would have more years to compound. Now it is crazy because if you look at how much you're actually putting in this account, you're putting in about $250,000. Now that's over the 41 years. But by the end of the 41 years, because of the compounding on the money and how it grows, that would give you $1 million. So that means that you get $750,000 just because you're putting it in this account and letting it sit on the side. You're letting the money grow for you. Now to start a Roth IRA account, it's very easy. It's like a checking account, savings account, or any other investment account. It's very easy to sign up. So what you do is look up Roth IRA, Fidelity, or Charles Schwab, and now you can see it gives you an option to open a Roth IRA account. And basically all you have to do is fill out a few questions about your information, and then you're good to go. Now as you saw from the Charles Schwab website, it says traditional or Roth IRA, and if you're curious what a traditional IRA is and what the difference is that a traditional IRA is an employee retirement account. So this means it's the money that you get from work. So instead of like a Roth, it's already taxed. Now this check is going to be pre-taxed, which means that you're going to not be taxed on it. So it should be a little bit higher actually. But the worst part about it is that you're going to have to pay these taxes at the end when you withdraw. So when you retire, let's say you have $1 million, you don't want to have to pull out 20% of that. Where the Roth IRA is you put your own money in from your amount that you have in your checking account or savings account, and that was already taxed for whatever you worked for in order to get that. That's why it's important to start with a Roth IRA. And if you can max out your contributions and you have a really good job, then later on get into a traditional IRA or even a 401k. A 401k is actually a really good idea because if you have a company that matches your income, so say you have a check of $1,000 and you can invest 3% of that into a 401k, the company could match that with additional 3%. And if your company does this 401k, it's going to be in safe investments like funds and ETFs, which in the long run is a very safe investment and no one should really be scared to do this. What I personally do in my Roth IRA is invest in big companies like tech companies, Apple, Amazon, Tesla, any future ones that I see because right now I'm more aggressive. Don't take anything I say and do it yourself. Just be cautious of what you're doing. Look at the numbers behind it and what you're willing to risk and what you want to do. You can take the safer route with the funds and the ETFs, or you can take a little bit more aggressive, especially at the beginning. It's all based off what you want. But it's important to understand that you don't have to take any taxes on the capital gains. So if you were to make $1,000 or something, you don't have to pay taxes on that. You really just have to feel out what you're looking for and if you want to just take it slow or if you're going to be more aggressive. It's all based off your own personal opinion on what you want to go into. Now yes, you have your own personal choice, but you also have to realize that you can't be risky. You don't want to do penny stocks, you don't want to go day trading. You want to understand what your position is and the fact that this Roth IRA is for you to retire, not for you to make money in the next 2 months. Now the reason I say this is because of a popular fact, 90% of people lose in the stock market. So if you do try to invest and think that you can make all this money trading penny stocks, then you might end up losing that money. 90% likely you will lose money. But if you invest in the strongest companies, ETFs, funds, you will have a very good percentage chance of making a good long-term growth and being able to retire tax-free, the millionaire that people say. Now a couple things you want to avoid as much as possible if you're investing in a Roth IRA is from withdrawing. Especially if you have earnings and you have to pay a penalty and taxes on top of that, you really want to try to avoid this as much as possible. So when you put in a safe amount and make sure that you don't have to withdraw anytime soon. You don't want to get penalized, and just think that when you put this money in, you're not taking it out until you're old. You don't want to have to take out any and get penalized and have to pay additional taxes as well. Another tip of advice, especially to those that max out their contribution limit and have a husband or wife, is to make sure that if you can contribute more to your spouses, do that as well. Just because it's an individual retirement account doesn't mean that you can't help out with your wife or husband. Now, I don't want you guys thinking that I'm trying to tell you guys everything on what to do because I'm not a financial expert or anything, but this is just my knowledge and ideas that I'm throwing out at you guys. Now, an interesting fact is that if you're married and have over $206,000 of income in your family, in that household, then you can't contribute any money to that Roth. Another important thing to realize is that you might not want to day trade or swing trade with this account because if you were to lose it, you would not be able to put any more into that account. Look into your own personal opinion about your finance and think what situation is the best that you want to get into. Whether it's growth companies, tech companies, any sector, or even ETFs or funds, think about what you want to do and don't buy the stock unless you can see yourself holding it for 5-10 years plus. And it's especially important with this account because you don't want to pull out until you're 59 and a half at that age where you don't have to pay any penalties or taxes. So make sure that the ones you pick are long-term growth stocks. or funds or ETFs, just anything that has a good average return over the long run. Now just the main overview of what you should take from this video is the fact that with a Roth IRA, you want to start as young as you can. The younger the better in order for your money to compound over time. The next concept is the fact that when you're putting in money, don't withdraw and do as much as you can to avoid this. And it's also very important to look at your financial status and think what you want to invest with. And it's also very important to realize when trading in the Roth IRA that any capital gains, which is the amount that you make profits on your stocks or whatever it is that you invest with, any capital gains you don't have to pay taxes on. So you could buy something and sell it a month later because it did really well, way better than you thought it would, and you wouldn't get penalized at all. Now if you were to take out the profits from the account, then you would. I appreciate you guys for watching, and just taking my biggest advice is to start this as young as you can and just continuously try to compound money and save as much as you can in order for you to create that financial stability that you want. If you guys have any questions, leave a comment below. Don't forget to hit that like button if you haven't already, and subscribe for more videos. Thank you guys for watching.